So you're at a crossroads as a real estate investor. Should you own single family or multifamily rental properties? Which is going to make you more wealth and cash flow? And which is easier to own? Well, those are the questions we're going to tackle in this edition of Ask Coach, and we're getting started right now. Welcome to the podcast, Real Estate Investing with Coach Carson. I'm your host, Chad Carson. You can also call me Coach Carson, and this is a show to help you get out of the financial grind so you can spend your time doing more of what matters. Today's question for Ask Coach was inspired by many discussions I've seen in the YouTube comments and also in my private community, Rental Property Mastery. If you haven't heard of Rental Property Mastery, it's the place where I coach and help small and mighty rental investors to acquire more deals, raise more money, and turn their rentals into passive income so they can achieve financial freedom. You can check it out or join at the link in the YouTube and the podcast description below. To help me answer today's question, I brought on one of the smartest real estate investors and professionals I know, Erion. He's from Houston, Texas, and he's also known as the investing architect. Now let's get to our conversation.
First, let me start by going over the advantages of investing in single-family properties, and then we can take them one at a time. I would say the biggest advantage of single-family properties is the lower entry cost and sort of the ease to get started. So when you invest in a single-family property, you can do so with 20% down if it's a pure investment, or you can like house hack it or turn your residences into rentals as you go. So that allows you to acquire them with as little as 0 to 5% down, depending on if you're doing FHA, VA, or conventional mortgages. So it's a very easy place to start because even if you're not a seasoned investor, most people that are investing in single family, they've owned the home. They know kind of what a person's looking for in a home. They might have even rented a home before, so they feel like they can understand what a tenant's looking for, which is if you think about it, it's a very basic business principle of understanding your audience, right? So why not start there?
It's like the Warren Buffett and the Charlie Munger own something that's simple and understandable, and it doesn't get any simpler and more understandable than a single family house.
Correct. Not only that, but instead of waiting and preparing and analyzing to death up until you can get to a point where you can invest in something big and sort of miss a decade in the process, you can get started now with what you have and what you understand. It's a great way to learn, because not everybody's cut out to be an investor. I know, a lot of gurus will disagree with me on that, but sometimes it's like, hey, an investing experience might not be for you, but you won't know that until you try it and until you actually own it. Like, you're not going to find that in a book. You're not going to find it in a podcast. You actually have to go through the experience to figure out, is this something that I really want to do? And why not start with a single family house that is easy to purchase? You understand the audience. And you can more or less operate it and sort of learn on the job, if you will.
And with that example, it's also easier to sell it. So if you do decide that you want to get rid of it, or just strategically you want to sell your property, there's nothing easier to sell than a single family house because it's the most in-demand asset. If I asked 100 people, which would you, all things being equal, same location, same everything else, would you rather live in a single family house, a condo, an apartment, a multifamily building? 99 out of 100 are going to be saying, oh, single family house, please, which means it's in demand. People want to live there. And then the financing is also super, super strong, not only for us as investors, but for our buyers. Like when you go to sell it, that's the most subsidized financing market in the world is the American housing market. So that's another benefit.
And that's the perfect segue because that's a second advantage to buying single family properties is that they're very easy to sell. And I would add to that they're easier to sell to a buyer that's less financially sophisticated, right? Because when especially if you're a first-time buyer or, it's a very emotional kind of decision. So, you might not necessarily say, hey, let me look at all these spreadsheets that I ran numbers on. And I'm, this is a very rational decision that I'm making here. It's a more emotional decision. It's like, hey, it's somebody's first home. So the financial aspect of it is secondary in some ways. As long as people can afford it, they feel like they should go ahead and make the move, which allows you to potentially sell at a better price than you would to a more rational actor who's running it on the basis of cash flow and numbers and so on.
Yeah, I would add to that. I love both of those reasons. One of the things I remember one of my mentors, John Schaub, always used to say is he loves single family houses, and he actually still invests in those 50 years later. Like, so for those who think you have to grow up and do something
Right.
different, he's owned, I think, a hotel, he's owned multifamily. He comes back to single family. That's all he wants to own. And he says one of the reasons he likes it is it's like a hybrid investment, meaning, we're going to get into multifamily, but you buy businesses and multifamily based on the cash flow those properties produce. And that's what
Right.
the value, we're going to talk about the value, but that's how you value a property in the commercial world, in the business world, in the stock world. Whereas single family houses, they produce income, not always as much as a multifamily, but they produce income. And yet if that property were vacant, it would still have the same value it would if the property were occupied. Like the income doesn't determine its value. The value is based on those emotional decisions that
Correct.
some buyer wants to live in. So I find that a very interesting investment in that it can produce income, but it's not dependent on that income for its value. Like I think that's a
Exactly.
pretty cool hybrid there.
Absolutely. And I mean, an additional reason, additional advantage that I would add is that generally speaking, single family homes attract more independent, less demanding tenants, right?
Yeah.
And what I mean by this is a tenant in a home tends to be more like a homeowner than a tenant in an apartment. Like tenants in apartments tend to have gotten used to like on-site maintenance. You call the office and they come and fix stuff for you. Whereas the single family tenant tends to be more independent. They take care of the little things generally themselves, and then expect you to take care of the big things, like if the AC goes out or something like that. So that allows for a better, less, like I would say, more boring and more fun investing experience.
Yeah, just to give a story for that exact reason, I have a single family house that my wife and I used to live in, and we still own it and manage it ourselves. Our tenants, who are amazing right now, the yard looks better than it's ever looked when I lived there. I mean, there's planters hanging on the front porch. The yard is beautiful. They have done extra stuff. They have a garden going. I mean, like one of the things we actually screen for on application is like, do you like to do landscaping? Do you like to
Nice.
like that? That's a legitimate thing. Like hey, you're gonna have this house in this yard. You got to take care of it. So it's very common to have people who take pride in their home and enjoy it. That's one of the reasons they want to live there. They have a yard, they get to take care of it. Whereas my multifamily properties, they don't do anything with the yard. We have to pay for that. We have to fix it.
Correct.
So it's another expense that we have to have.
No, absolutely. Also, single family properties tend to have higher appreciation rates over time, and this is mainly tied to, at least in the markets that I operate in, the quality of schools that are involved. And that produces another benefit in the sense that if you buy a property in a really good school district, it tends to attract tenants that have kids go into those good schools. And unless the relationship is broken or something, or their experience owning your property or renting your property is not good, they will likely not move out until their kids are done with that grade, might it be elementary or middle or high school, which generally leads to longer tenancies and less turnover over time. So you're dealing with again, it goes back to being a better owning experience as well as more profitable at the same time.
Yeah, and especially if you have good storage in your single family house, that's even kind of doubly true because you get a garage and your tenant likes the school district, they want to be there, and then they stuff all their stuff in the garage, they stuff more stuff in the attic, maybe you have a little crawl space area. It's really difficult to move out. We all know this. Like when we have to move, it's called, in the business world, they call that a switching cost. To
Correct.
switch to another unit, to go back to an apartment, you'd have to rent like 3 storage units to hold all your stuff, or you'd have to sell stuff. And a lot of people are just like, whatever. I'm not going to do it. I'm not going to move. And that's as a one of your goals as a landlord is to have people who stay a long time. And that's an advantage. If you can have a well-located single family house with good storage, you're going to get 5, 10, sometimes 15-year tenants who stay in your house.
Yeah, and I love it when I go show a single family house to an investor and they say, "Do you think a pickup truck will fit in the garage?" I'm like, nobody's going to park their cars in the garage. I mean, the real question is like, how many tons of storage, right, can we get inside this place?
Exactly. All right. So we said a lot of positive here. It's not all positive. Every investment has its pluses and minuses. What do you see as the big drawback of a single family investment?
Well, one of the drawbacks is the whole hybrid idea, right? So the downside of the hybrid idea is that if you are really good at operating your single family rental, you don't necessarily get a value reward for that. Meaning, if you're good at like keeping your tenants in place and increasing rents over time, like your property is not automatically worth more money just because you raise the rents on it. Like you're still constrained by the comparable sales in the area where, so essentially if you have somebody who is not such a good operator in the same neighborhood, right, and they don't do well with their property and they just decide to dump it, like that impacts you negatively, but you don't get the benefit of your operating prowess on the other side.
Yeah, good point. You do make more cash flow, so you would benefit in the
You
short
do.
run, but that cash flow doesn't translate. There's not a multiple that translates
Correct.
into a higher value because the value is determined by the comps, by what other properties sell for.
Correct. The second disadvantage I would say is that on average, single family homes have higher expense percentages. So basically, more of your income is consumed by expenses than other properties like small multifamily or multifamily properties. So, in my experience, single family homes, if they're property managed, usually 50 to 55% of your rent goes to expenses, whereas on small multifamily, that's probably somewhere around 35 to 42%. So that difference between the two can create a situation where you could be break even on a single family, but you would be cash flow positive on a small multifamily.
Yeah, I found something similar. And to think about this intuitively, you have one roof in a house that rents for $2,000, and maybe you have a roof that's 20% bigger, and you could house a duplex with two tenants who pay $1,500 each, right? So you have
Correct.
3,000 in rent for a roof that's 20% bigger, and you get to see how like the amount of income per capital expense is a lot is different. The only thing I would add, the tricky part that I'm still trying to figure out my own portfolio, like I've tried to prune off some of my single family houses that had a less desirable kind of overall long term income, and it was often because those houses turned over too often. So if a tenant stays for 10 years, 15 years, there's an equalizing effect I found on that kind of operating difference. So if I don't
Correct.
have, if it doesn't turn over once every 5 to 10 years, I think about how much less I have in vacancy, think about how my maintenance costs go down. I still have the big capital expenses that I have to pay, but man, it really could change that from like a 50 to 55% expense ratio to maybe like a 40%. And then
Right.
you can be equals, but that's why picking the right property, the right maintenance, the right location is it's a critical piece. I mean, it's like a 10 to 20%, percentage of your operating expenses difference if you can get the right
Margin.
spot.
Yeah.
Yeah.
And also like in addition to that, I think the expenses on single families, like they grow over time, and you cannot control that, right? So like we're in a situation right now where property taxes, like all the counties have been very aggressive at increasing property taxes. Same thing is happening with the insurance market, right? And oftentimes you don't have the option of going in and telling your tenant, hey, my taxes went up, my insurance went up, I'm going to raise your rent $150. Like that's not going to happen because the market's not going to bear that. So you can potentially look at a situation where like your margins are deteriorating over time, even if like the tenant is there, to the point that like here recently, like I used to love long-term leases, 2 years, 3 years. Like if you want to commit to me, like I'm game. Not anymore, right? Like I'll sign a 1 year lease and I'll reassess like where we are financially, because you're it's almost like the reverse effect of a fixed rate mortgage, right? That this like the fixed rate rent, right, where my rent stays the same, but all these other expenses keep increasing over time.
Yeah, that's the sign of inflation, right? You have to, yeah, the shorter leases, we might get to 6 months eventually and have to renew the 6 month lease. So I'm hearing like we've kind of alluded to this, but in general, we're going to get to the small multifamily and large multifamily. A single family house overall, my experience has been produces less cash flow as a percentage of what we pay for the property. So if you want to think about it like a cap rate, or if you want to think about it like an
Correct.
unleveraged yield or a cash on cash return, however you want to measure cash flow, typically a single family house is not going to be, at least up front, is not going to be your best cash flow play. It's going to be more in that realm where you're going to make your money on appreciation, on growth, or maybe when you pay the property off, then it's going to produce better cash flow, but it's not going to be your cash cow in the beginning. At least that's my experience. All right, let's move on. So we've talked about a lot of the pluses and some of the minuses of single family. Let's transition to kind of the cousin of a single family house, a small multifamily, which we define as a 2 to 4 unit. So a duplex, a threeplex, a fourplex. I would even slip in there. I will see what you think about this. A single family house that has an ADU, which is very popular these days.
Right.
Something with a basement apartment, a granny flat. So
Right.
let's get your take on some of the positives, the pluses of owning that kind of investment.
So to me, that is the ultimate hybrid property, right? Because it has some of the features of the larger multifamily properties and some of the features of the single family. So I think one of the biggest advantages of small multifamily is that you can essentially do the same residential financing that you can do on a house. So you can get a 30-year fixed mortgage, and you can also it also allows you to do the house hacking part, right? Where in some ways I would argue in a better way, right? Because in a single family house, you're sort of like, okay, well, I'm occupying the house and I'm getting roommates. So you're sort of living with your tenants, which I don't recommend particularly. But if you have a duplex or a fourplex, you occupy one unit and you have your own private space, and you still are renting out the 1, 2, or 3 other units, right? So it's very conducive to doing the house hacking and putting I would say one of the big equalizer strategies to allow like somebody in the middle class or the lower middle class to make it financially is the ability to buy a fourplex with 5% down or 3% down, or if you're a veteran, that's 0% down.
I personally think one of the best trends in real estate over the last 10 years has been the reemergence as like a cultural phenomenon of the house hack. Because I love the old stories. Like I talked to my grandparents in their era, or I talked to my wife's grandparents. Like it was so common in St. Louis, where my wife's family's from, or if you talk about Chicago or any of the big metro cities, it was so common for families, especially immigrant families, to have you live in one part of the unit and then you rent out 2 or 3 other parts of your house. You have the up and down duplex. I mean, it was just a practical way that people did things. Like, hey, I can't own the whole house. Like, let me rent to people just to have some extra income. It was just something people did because it made sense. And we went through a period where no, nobody does that, or at least it wasn't as culturally cool to do it. I love that the house hack is a thing now, that people see it as a not only a good thing to do, it's a smart thing to do. Why would you go buy a big old house as your first home? Live in a duplex, live in a house with an ADU. Like it's such a positive financial trend.
And I mean, we had to endure the TikTok dances so that this could become like, this is the plus side. This is the plus side of the TikTok thing.
Well, we got to make it cool. I mean, we can't be cool without the TikTok dances, right?
Absolutely. So that is one of the advantages of small multifamily. I would say the biggest advantage of it is that so if you're trying to build a large portfolio, so if your goals are such that you want to, like, let's say you're on an executive salary now and you want to create a portfolio that produces something similar to your executive salary now, you start to run into the issue of, there are only so many conventional loans that they will allow you to get before you have to go into a portfolio or a commercial type loan. So, currently that maximum is 10, right? So you get, and that includes your primary residence. So if you've got a mortgage on your primary residence and you've got 9 loans that you can use. So if you fill all those loans with single family loans, then you are basically constricted to owning 9 units. So if those 9 units don't produce the income that you need, you're sort of tapped out. With the small multifamily, it allows you to essentially purchase to fit more units into each slot. So it allows you to build a significantly larger portfolio while staying within the constraints of conventional financing. And I think that is the biggest advantage of small multifamily.
Huge. Yeah. All of these really come down to financing. The fact that you can do house hack and get a 5% down payment, or on a multifamily property, that's amazing. The fact that you can get 9 conventional 30-year fixed mortgages. And if you have each of those as a duplex, that's 18 units. Or if you had triplexes, you could have even more than that. That's a really underrated way to think about growing your portfolio. I would go to the other side too. We've in another video we've talked about how real estate really comes down to two things: the financing and the asset. And I want to double click on something you said earlier, is that something I love about 2, 3, and 4 units is that very often they're sort of mixed into single family subdivisions, or they're right
Correct.
next to them. Whereas when you get into the larger multifamily properties, it's just the way zoning is in this country is that we separate uses. And sometimes every once in a while you'll find a big multifamily in a great location, but it's much more common to have single family and duplexes, especially older duplexes, mixed into the neighborhoods that have character and the better school districts. It's very difficult to get dense zoning for commercial or multifamily in the best locations. It's just very rare. Whereas you can have a lot of little small multifamilies. And I think it's a trend that if you see like housing being less affordable, it's going to be easier for city councils to convince them to allow single family zoning to go to a duplex zoning, or to add ADUs, than it is to say, hey, let's add a bunch of multifamily properties. So I like the neighborhood factor, that this is kind of like living in a single family subdivision. If you live in a duplex as a tenant, you have a yard, you have your space. I mean, you'd much rather live in a duplex if you're a tenant than you would living in an apartment building where you have a tenant on top of you making noise, where you really don't have a yard. So it's just a more desirable experience. Therefore, I think you would have an easier time renting it, an easier time keeping it full for a while. I have duplexes where not exactly as long as my single family, but I've had people stay for 5 to 10 years in some of my duplexes as well.
Yeah, and you get less pushback, right? Because the reason why they don't approve them is because people in single family neighborhoods don't view like large multifamily being built in the areas where they live as super favorably. So one of the ways that I've seen this become easier is that when people build duplexes now, they almost structure them as like 2 units into each unit has its own lot. So they're technically attached townhomes, but you can still buy the entire building. And so you sort of get the ease of approval from the city, because like, no, these are not multifamily. These are attached townhomes. You can sell them individually, but most of the time people go and purchase them as, 2 units under the same building.
Interesting. Yeah, zoning's a whole nother topic I'd love to have a call with you about another time, another place. So can you think of any, we've mentioned a lot of positives. We're both very, very fond of 2 to 4 units. It's an important place in every investor's portfolio. Can you think of any obvious downsides that maybe tilt us towards single family or towards multifamily and not towards the 2 to 4 units?
I mean, the biggest downside is that, especially for small multifamily in areas where you'd want to invest. Like, so if you're a quality seeking investor, the biggest downside, I think, it's the higher barrier to entry. Like, it just requires more capital to get into, because these properties, if you're buying stuff that is not 40 years old or 50 years old, if you're buying something newer, you're looking at anywhere from high 400s into a little bit over $1 million. So, if you're purchasing it with 25% down, I mean, we're talking, 6 figures of capital that you've got to come up with. So that might not be accessible for every investor. And that's, I think, the biggest downside.
Got it. Larger down payments because you're paying for a little bit higher price. Okay.
Correct.
All right. So I think we've given a fair analysis of the single family, the small multifamily. Let's transition into the larger multifamily. And the reason I want to really emphasize this, there's when you grow up as an investor, typically you're told that the larger multifamily is where you end up. And I want to disclose, I do own large multifamily. As much as I love the small and mighty investor style. I love single family. I love small multifamily. Multifamily buildings, like we own a property that has 48 units on one parcel, has been the most transformational investment I've ever made. It's one of the best investments we ever made. So there's a place for this for those who want to get into it. I don't think everybody needs to, but let's unpack the positives, maybe some of the drawbacks of getting into the larger multifamily. I'll let you take it first, and I'll add some color to that.
So I think the biggest difference between the first 2 categories, the single family, the small multifamily, and the large multifamily, is that you own single family and small multifamily properties, but you run a large multifamily business. That is the biggest difference between the two. Is like, if you're, generally speaking, if you purchase large multifamily properties, you're not going to be able to get a Class A large multifamily unless you're an institutional buyer, right? Like, you're not going to be able to get, and I mean, you might get one that's like just over the 4 unit limit. But if we're talking 40 units, 50 units, most of the time you're going to be getting properties that are in either a sort of like a B minus, C plus kind of community. At least that's been my experience. And there's a almost like a value add kind of opportunity there where you're going in and into an area where rents either haven't kept up with the market, or the property is mismanaged and hasn't been operating the way it should, or there's maybe deferred maintenance that once you do it would unlock rent increases. But it's very much a business plan, right? So when you buy a large multifamily property, you're going in there with a specific plan that you're going to execute between now and, let's say, 18 to 36 months from now. That it's a very long, like, it's not a, hey, I bought it, I put a tenant in there and I just set it and forget it. It's a much more active, involved type of investment.
Yeah, that seems to be probably the one of the biggest positives and negatives in my mind. Is that the negative is you have to be ready to be in business. You have to have an operation team. You got to have a really good property manager. You probably need to have a good contracting team. You need to be prepared to make hard decisions. If the rent is 50% of the full value, are you prepared to vacate the building and have vacancy costs and deal with the kind of backlash socially from having an empty building and then getting it up to market rents? Like, that's not an easy thing to do, and it's a challenge. So that's the operationally really difficult. But I would also say on the other side of that, if you can do that, one of the biggest advantages of multifamily, we talked about earlier, the hybrid investment single family house. Well, the opposite is true with a multifamily. It's a pure business, in that the value of that business, for every dollar you can increase the cash flow of that business, you'll increase the value by some multiple.
Correct.
And that's enormous. So, like, if the rents are like, and I'll give you my example of the multifamily we bought. When we bought the property, the rents were below $400 per unit for a 2-bedroom, 1-bath in Clemson, South Carolina, where we are. And this was in 2017 or 16, 17. So they were below the market. The market, I thought at the time, was maybe 600 to 700, somewhere in there. And so 395 versus 700, almost 50% of the value. So us buying it, and then over in the next year, remodeling a bunch of the units, getting them fixed up, getting them re-rented, restabilized, increased the value significantly. I think we were all in probably $1.2 million when we were done. The whole building was probably worth 2 to 2.25, somewhere in there. So you can make $1 million in value in one deal, using your operational, efficiency, your ability to assess the market, your ability to manage projects. So you can make some big money in equity by forcing that appreciation. And then on the back end of that, it's also been the best cash flow property we've bought, because we've increased the rent, because we also have debt that's fixed, then we can make some pretty good cash flow on the back end. So it was something that allowed me to have financial independence as well, because we had some really good cash flow coming in from that.
Wait a minute. Are you telling me that you didn't just like change the name to The Manor and like stripe the parking lot and make $1 million?
No. Did a little bit more work than that. It's kind of a joke there's been so many value adds since then. Like, that was kind of the beginning of the wave that on my email inbox is filled with people saying, we're going to do this value add deal where we're going to, the rents are below value and the operations are significantly, the property management's really bad, and we're going to increase it. It's just kind of a standard thing. So it has a lot of potential. And that's one of the reasons it was become so popular over the last 5 to 10 years, is the rents in the market have gone up in a lot of places. There's been a lot of older inventory. So huge advantages in the cash flow and the equity market. I would say the disadvantage, and one of the reasons I am not as keen on big multifamily, is the financing. And we talked about the financing a lot with single family and small multifamily, how if you can lock in a 30-year fixed financing, that's one of the least risky, most stable ways to build wealth when you have rent going up and your biggest expense is fixed. Well, the commercial market, as we're seeing in 2024 right now, it is not that way. Is that most mortgages are, if you look at a mortgage package on a commercial loan, it's like that thick. It's like 2 or 3 inches thick. And it has a bunch of small print that the bank and their attorneys have put in there about what happens if this happens. What happens if you run out of liquidity? What happens if we think the operating expenses on the property have gone down and we want you to put in more reserves? Or what happens if you want to refinance and the interest rates have gone up like they have right now, that you might have to, put in more money in order to refinance. Like, there's just a bunch of gotchas in there, and the financing can cause you everything you did with that value add to go downhill really quickly. And you're playing a big game, and the bigger game you play, the harder you fall when things don't work out. And the nature of my game that I like to play, the small and mighty game, is to continue making progress, but be like the tortoise and not the hare. And taking a chance every once in a while is what we've done. But it took us a while to digest that big deal that we did. And I was really nervous about it. So we set aside a lot of cash. When we bought that deal, we made a very large down payment. So we got a commercial loan, but when we purchased it for $1 million, we put like a $500,000 down. Like we had a significant down payment.
You hedged the risk.
Yeah, I didn't want to have our destiny be determined on whether we could refinance a commercial loan or not. I wanted to have a really low loan to value so that we could then, if we had to refinance, interest rates went up. I figured I could go out and pitch, 20 of my friends and say, hey, look, can you put up a couple $100,000 or $100,000 and I'll pay you 8% interest, and you could be at a 30% loan to value. Like, it was one of those kind of thoughts. And so
you didn't want to have your head in the interest rate guillotine.
No, exactly.
For 10 years straight.
Exactly. So just something to think about. Like, the multifamily game is fun. It's interesting. But it's got as many ups as it's got a lot of downs. A lot of people don't talk about the downs. And then the final piece I would say that I think is a significant advantage for smaller investors, and I'll let you add any other ones you have too, Erion, is that when you're thinking about your strategy as an investor long run, the whole goal is to get financial freedom. And yes, large multifamilies can get you there one big leap. You can make this big leap. But I compare it to, like, when you finally want to get to financial freedom and diversify a little bit, or move, I call it like moving the chess pieces around on the chessboard. You have this one big property with a lot of your equity in one big property. And if you wanted to sell that one big property, what are you going to do with that money when you sell it? You got to go find like a bunch of smaller ones. Maybe if you're going to do a 1031 exchange, you got to find another larger property, as opposed to if you had the same amount of equity, but you had 10 or 15 smaller properties, you could choose to sell one or two. And these are like, instead of like one big ship that takes a lot of time to steer, you have these bunch of little small ships. They can turn on a dime. You can sell one or two. You can move your chess pieces around, to use another metaphor. It's just a much more flexible wealth plan, I have found, to have a bunch of small properties as opposed to all your eggs in one basket, one or two big properties. It's just a different way to think about it.
To be fair, to sort of balance things a little bit, one of the things that a large multifamily allows you to do, like especially a large multifamily where the value gets impacted by you operating it better and increasing rents and sort of having this equity level, it allows you to pull money out tax-free to do other deals, right? Where some of the smaller deals may not allow you to do that, or you'd have to package a few of them together to be able to do that.
That's true. And in the price level we're at, if you have a $2 to $3 million building, you could actually get what's called an agency loan, which is a non-recourse loan for $1 million. So you could, there are no non-recourse loans that I know of in the small multifamily world. So yes, there are definite advantages. I guess what I want to give is that the story that you have to get big in order to make it big. There's the people who go big with these buildings have a particular reason. They have a particular temperament. They have a particular market they're investing in. But I know for every one of those, I know dozens and dozens of people with small multifamily and single family who've done just fine. And I own a lot of small multifamily. That's like one exception to our portfolio. And then we have a lot of duplexes, fourplexes, single family houses, a couple mobile homes. So for me, it's been kind of a diversification among those different types and to try to get the benefit of both.
Yeah, I think the way that you choose which route to go here it's basically the Occam's razor for real estate, is basically what is the simplest, most elegant tool to get the job done.
Yep.
In other words, if your goal is, hey, I want to get to $50,000 in income from my real estate investments, it's like buy 5 houses, pay them off, you're done, right? Like you don't need to complicate your life. You don't need to be dealing with, all the things that come from owning a large multifamily in a C-class neighborhood and all of that. It's unnecessary, right? That you can get the job done
Yep.
with a tool that is a lot more effective at that. If you're trying to create a larger, six-figure kind of passive income, you can get into the small multifamily and sort of use all of those loan slots that you have available, to build a portfolio that could be $5-6 million, but is just spread and distributed over all these properties. And then if you really have an entrepreneurial itch and you want to run a real estate business, right, by owning property, and if you have and I always like to talk about this, like if you're going to run a business, you have to think about what your edge is. Like what do you bring to the table? What is your competitive advantage in that business, right? So you mentioned earlier, like your team, your contractors, your ability to source deals, all of those are edges that you have to have. Because keep in mind that when you're buying a house, right, like you're basically competing with maybe a couple of investors and 2 or 3 other buyers that are looking. If you're talking about, large multifamily properties, you are now dealing with sophisticated players that might be on their 10th deal or on their 20th deal. So you really have to have an edge to be able to compete in that space, right? So are you able to find deals that nobody knows about? Do you have vendors that can get the job done quickly? Do you have experience in like how to rent property or what are your edges? But if you have that itch, definitely large multifamily is the way to go there.
Yeah, I think that's the key here. We talked a lot about a lot of property advantages and disadvantages as if they're decisions made in a vacuum. But ultimately, what I think you do such a great job with, Erion, and I try to help people out with as well, is that real estate investing is very personal. And every decision you make goes through the lens of your strengths and weaknesses, your preferences, your goals, like what you're trying to accomplish. And what you just explained there, I think, is the perfect kind of matrix that we have to make this decide in. We have to look at all this stuff we just covered and put it through our own lens of our own life, make a decision, and then live with that decision and be okay with it. That's the message I want to say. If you're the person with the 5 houses and you got them paid off and you make $5,000 a year, $5,000 a month, or $60,000 a year, that is successful. That's great. Like that.
Yeah,
That
don't let anybody tell you that make you feel like you're playing small. Like you're playing the game that you want to play. Like you're playing the game that you chose to play to reach the goals that you set, right? And some people have goals that have larger goals than you, but that you may not want to reach that. Like you may not want the life of somebody who and the stress that comes from running a large multifamily property. Like you may want the results of it, but you may not want the process of going through it. So don't let anybody make you feel like you're playing small or you're sort of holding back. Like if that is truly your goal, then focus on your game.
Well said. Erion, they don't call you the investing architect for nothing. You are wonderful at laying it out, architecting our real estate investing strategies. I want to give you a chance to let everybody know how they can follow up with you. If they want to follow you online, if they want to work with you as a real estate agent or your property management business, let people know how they can connect with you.
Thank you. They can connect with me on signaturehouston.com, my website, or on Twitter at investarchitect, or on LinkedIn.
Awesome. Great talking to you. Talk again soon.
Same here.
So in this video, my goal was to help you decide whether you should invest in single family or multifamily properties. But this question is only the start if you want to identify the best rental properties. So in the next video, I talk about all of the most important criteria that I look for in a rental property. This is all about creating a buy box, which is a description of the type of property, the location, the materials, and all the details that make up a great rental property. And I give you my actual comprehensive list of criteria so that you can borrow that and use it for yourself. So check it out. There'll be a thumbnail link above me here, and there'll also be a link below me in the video and the podcast description. I'll see you in the next video.